So you could have made easily over $10,000 of profits if you had over $60,000 of capital to place this trade on Tesla before earnings. If you sold the 1600 straddle, you would have collected about $220 times 100 shares if you do one contract, so that's $22,000. And you can see that right now at 9:59 a.m. the next day, Tesla's trading at around 1600. You would have been able to buy back this straddle for about $82, $85. So that's over $10,000 of profit just overnight. Now, of course, it comes with a lot of risk. So what is a straddle? So here is the Tesla straddle explained. So if you sell the call option and the put option at the same strike where the market is trading at, so 1600 for example, at the close, or right before the close, you would have collected in total combined $220 per contract. So that means your break even is 1600 plus 220, so 1820, and 1600 minus 220, which is what you collected, which gives you 1380. So that's your break even zone. Anything anything above 1820 or below 1380, you start losing money, and it's undefined. You don't know how much you could lose. It's unlimited. So for example, if Tesla closes at 2000 on expiration Friday, then you would lose 2000 minus 1820. So that's $180 times 100 shares. So that's $18,200 that you would lose if Tesla closes at 2000 on expiration Friday. So that's the risk with this trade, is you don't know how much you can lose and you don't know where Tesla's going to end up. But the reward is if Tesla stays within this zone, then you would make a good amount of profit. If it's close, the closer it is to 1600, of course, the higher the profit. Now, because there's still 1 day left to expiration, there's still some time value left in the options. So that's why if you look at the straddle, the Tesla straddle at 1600, it's still trading at around $79. That's because it expires Friday, which is tomorrow, end of day. So there's still some time value left in the options, but it went from 220 to 79 overnight after earnings was released. So there's, because of hype before earnings, so the option prices are overstated, but then once earnings is released, then it comes down quickly. So there's a volatility crush, and that's what you can take advantage of if you had the capital, of course, and if you had the guts to risk an undefined trade, because you don't know how much you could lose. But if you look at probabilities, what are the chances that it moves from 1600 to 2000 after earnings? I mean, it is possible with Tesla, but I mean, there are many websites that allow you to track the past historical movements or statistics, and you can see that Tesla has moved within expected move 70% of the time. So it has a high probability of staying within expected move. What is the expected move? Basically, expected move is the value of the straddle before earnings. So the expected move yesterday on Tesla was about $220. And based on historical probabilities, it has a 70% chance of staying within 1380 and 1820 after earnings is announced. And as you can see today, it's trading exactly at 1600, and that 220 straddle that you would have sold, you would have profited easily over $10,000. Capital requirement for this trade, to place this trade, is $60,000. But of course, your max loss is undefined. You don't know how much you could lose. But this is definitely how, I guess, the rich get richer. But you could see that Tesla, on one occasion, it moved 25% above its price after earnings. And then there's another occasion where it moved almost 17%. It has two occasions where it dropped more than 10%. But most of the time, it stays within expected move. But the advantage yesterday is that the expected move was so high. It was representing a 15% implied movement. So basically, 220 divided by 1600 was about 15%. So that's pretty high, especially since the average expected move is 8%. Yesterday was 15%, so almost double. So it was a perfect chance to make that trade yesterday. Plus, the average actual move is only 6%. So you're selling something based on the fact that it will move 15%, but most of the time it moves on average 6%. So that seems like an easy win, but obviously nothing is guaranteed. Anything can happen. And just because it moved before 25% does not mean that it cannot move higher than that. Who's to say that it won't move 50%? It's just more unlikely that it will do that, but anything is possible. Now, of course, because I can't risk that trade, I was actually thinking of selling a call on Tesla, same way I did on Netflix. I was thinking of going up to 2500 strike, and let's look at the 2500 strike. Yesterday was worth $2, so I would have collected $200 if I sold the 2500 strike. So basically, I win as long as Tesla stays below 2500 today or tomorrow. And let's go see what it's worth, just to see what I missed out on. So I was gonna sell the 2500 call for $2, and right now I'm just scrolling down to get to 2500. You could see it's trading for 5 cents. So I would have made about $195 profit if I had the guts to sell that naked call at 2500 strike, which I was going to, because that represents about, Tesla would have to move up, I believe, 57% to reach 2500. So that's kind of unlikely. Knowing how crazy Tesla is, I was a little bit scared. I know anything is possible with Tesla. There was so much hype with Tesla. So I just felt like I'd rather not take the $200 and just see what happens. But definitely disappointed I missed out on that. The straddle though, not that disappointed, because of course I wasn't going to do it. I don't think I have the guts for that trade, but it's nice to see what's possible out there. All right, so if you have any questions, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back, depending on your deposit. And the other one gives you $50 in free trades, regardless of your deposit. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.